Welcome to Dollars and Cents, hosted by Sanjiv Gupta CPA. Dollars and Cents is the show about growing more of what you are making, saving more of what you are growing, and making more of what you are growing and saving in the most sensible and tax efficient manner possible. Feel free to call into our studio number to be live on air with your questions. Call 408 912 5038. That's 408 912 5038. And here is your host of Dollars and Cents, Sanjiv Gupta CPA.
Good evening, friends. This is your own CPA, Sanjiv Gupta CPA. Welcome to today's information packed Dollars and Cents show, where we are going to discuss a lot of important topics for the listeners, for the benefit of our listeners. In our dollar topic segment, we are going to cover things that we need to take care by January 31st, 4 days from now. January 31st is going to come. So, what things we have to take care, what things have to be filed and mailed out, we are going to talk about that in our dollar topic segment. In our dollar update, we have two important things which we want to discuss. What are those? We have first thing is we know the Apple stock is not going was lower this today, but Apple revenue topped $100 billion for the first time on iPhone sales, first time in the quarter. That's a great news for Apple. I always believe in Apple stock because it is not only based on software sales, it's based on it has asset sale. Assets also strong. It's a very strong company, by the way. And the second thing we know, the stock market today tanked because the Federal Reserve, for the chairman Powell said, they're not leaving they're not increasing the interest rate, and they're going to keep it for a year or two. And the Federal Reserve pledged to continue making huge purchases of government-backed bonds as the central bank tries to help the U.S. economy weather this pandemic ongoing hit. We know that there's a lot of deficiencies in vaccine distribution. About 44 million doses of vaccine are distributed, but only 24 million people have those vaccines on their arms. So there's a difference of 20 million doses not being given to people on their arms. President Biden has promised to buy more millions doses and promised that there will be an effort, all-time effort by the government to make sure that most of the people get vaccines and this pandemic comes to an end by end of this summer. Hopefully this will come back. This will realize, and this will help people to come out and start living their normal life. How quickly that will happen? Well, if we have to see, we have to wait and watch and what happens and take it from there. Any questions? We are in tax season. Any question you're looking to get answer to from a CPA, tax professional, this is the time to connect with me. I'm on air. The phone number here at the studio is 408 912 5038. 408 912 5038. Any question relating foreign income disclosure, any question relating to uh, PPP dollar PPP segments like first phase and second phase, any question related to capital gains computation, estimated tax payment, uh, any question which you have been troubling to you and looking to get an answer, this is a time to call the studio number 408 912 5038. My firm, Sanjay Gupta CPA, has offices in Fremont, Sunnyvale, and Pleasanton, and we have a team of experienced CPAs, CAs, EAs, and experienced accounting professionals who are not only versed in on US tax rules and regulations, but also with Indian tax and rules and regulations, and have been very instrumental in providing excellent services to our client and satisfaction to our client in those areas. Myself, not only a CPA, but also an experienced chartered accountant, having practiced in India for 10 plus years before coming to US, and have been dealing with all complex tax returns which you can think about, whether it's individual taxes, business taxes, trust taxes, uh, gift tax returns, all those complexities we have been dealt with. Studio number is open 408-912-5038 for your question. In our dollar topic segment today, we're going to discuss few things about what should be taken care of before January 31st comes. So we have some callers here. Let me take this call. Good evening, this is Sanjiv Gupta CPA.
Hey, good evening. How are you?
I'm fine. Thank you for the call.
Yeah, I had a question. If somebody had a house sale in 2020,
Uh-huh.
and the proceeds from that house sale, what is the rules for taxing for for the gains from the house sale?
So we have to look at this whether the house is a primary residence or a rental property or investment property or like just like a commercial property. So what is this property? Is it primary or rental or investment?
It was a primary residence, and
Yeah.
it was held for more than 5 years.
Yes. So if it's a primary residence, the rule says that if you're owning and using that home for 2 out of 5 years before you sell it, 5 years start from the date you own it, and 5 years end at the date when you sell it. So in that 5 year period, if you own and use that house for two out of those 5 years, your gain is excluded up to $500,000. Now, if you have a gain exceeding $500,000, then you're subject to a long-term capital gains, federal and California. If you're in California, you have to pay California taxes. The federal is about 15 to 20% tax on that gain in exceeding $500,000. Now, 15% is up to if you're married filing joint. AGI, if your AGI is up to $496,000, 15% you have to pay federal. And if your AGI AGI is a total income. If your total income exceeds $496,000, then federal taxes becomes 20% from 15%. There's a 3.8% Medicare tax also there if your total income exceed $250,000. That now AGI again total income is includes the capital gains of more than $500,000 in that total income. So your federal tax is 15% to 20% plus Medicare tax of 3.8% if your total income exceed $250,000 plus California taxes of 6%, start from 6% and goes up to 13.3% depending upon your income level exceeding 1 million plus. So roughly you're looking around 25 to 30% tax on that income that exceed $500,000. Now, what can you do to avoid those taxes? You can look into qualified opportunity funds, QOF. You have a time of 6 months to invest in those funds. So you can Google online and find out about those strategies, QOF, or you can look at some kind of donor advised funds. There's certain strategies where you can look into like complex studies like CRTs and other things which I have to explain on another time, but definitely you can look into that. Uh, but but the the taxes are about roughly around 25% to 35% on that gain that exceed $500,000. Okay.
Got it. So only on the gain of about 500,000. And then, is there any rule like if you reinvest it to buy another house, can you avoid the tax or
No,
can you
that
minimize it?
1031, yeah, that 1031 exchange is related only and only to investment or rental properties, not related to primary
Got it.
residence sales. Okay.
Got it. Okay. Thank you
But
very much.
but but thank you. That's a very important question and good question. Listeners, if you have any question, you can call the studio number 408-912-5038. We have another caller on the line. Good evening, this is Sanjiv Gupta CPA.
Hello, Sanjeev ji. How are you?
I'm fine. Thank you for the call.
One quick question I have is regarding the reporting of the income from house property in India. If you are a
Mhm,
resident here and you are a permanent resident
mhm,
and you earn in US and then you have a property in India which you had
mhm,
purchased and you have put on rent.
mhm, mhm.
So in the past, if you have forgot, not intentionally, due to some reasons, if you forget to report that income, minimal income, whatever you had, it was not going to be taxable in India because it was so minimal. But from the US standpoint, should we report that? My belief is yes, but I think in the past I have not. So what is the ideal way to get that reported, or if we need to report it, in the
That's a
current
very
year
good.
tax
That's
return?
a very good question, and we have been talking about on this for a long time. But again, just answering to your question about not reporting the foreign rental income on your tax returns. So there are two things you have to look into. Number one, if the rental income is substantial, means anything more than $25,000 in a rental income over the year, on a yearly basis is substantial. Then we have to look at certain other aspect like amnesty programs, other things. But if the rental income is not substantial, it's material like to report it even for a dollar, that is less than $25,000, then you can report, you can go back and amend your return for last 2 years or 3 years because statute of limitation allows for 3 years amendment. Going back, you can amend those last 3 years amendment, make the return comply with those requirements of reporting that rental income and getting the rental expenses, getting the depreciation up to date on that property. So it's important you can go back and amend those 3 years. Now if you have the second aspect is if you have assets like financial assets like bank accounts and other things where the rental income is going there, and you're investing that money in another and you like putting that money in a CD or investing that money in a mutual funds or investing in another assets, and that is growing also, then this is a different aspect. Then we have to look at the amnesty programs like streamlined domestic offshore procedure and make sure that you're complying with those requirements. If you don't have those things, then you can go ahead and amend those the last 3 years returns and become compliant with starting from those 3 years. Now you cannot just forget to you cannot just start doing it for the current year, because if you're doing for current year, the chances are the IRS can come back and say what happened to prior years, and then you will be in a bigger soup. So it's better to do it properly and in a proper manner is to go ahead and amend those returns, those years returns which are open, and get in the line with compliance. Okay.
So just a quick follow-up question, Sanjeev ji. When you go and amend, so ideally you're saying that before you file current year tax return, go back and amend the prior year ones if
Yeah.
you want to, or you should ideally, if it's less than
Yes.
25K. So when I
Right.
when I do that, start that process, will that, let's say I file one amendment, will that trigger the IRS question at that, what is going on? Or they will
Yes.
say, you know what, let's see as a whole, they will wait for it, Just want to be,
Yes.
will it trigger
So
something immediately? No.
no, so it can trigger. It can IRS can always come back and say what happened to those years which you're not filed. In that case, you can say I can go ahead and file those years return as long as you can open that return. And if you get a notice, you can file those years return as well. As of today, as of now, you cannot file the prior year. You cannot go back beyond 3 years because those years are
Hmm.
closed as per the statute of limitations. Okay, so they know it.
Okay, thank
So
you.
you're still in compliance form. Thank you for the call. That's very great
Okay,
question. Thank you.
yeah, thank
Really
you.
appreciate. So listeners, if you have any question, is it time to call the studio number? Studio line is open 408-912-5038. If you're looking to get an answer to a question on capital gains, stock sales, people have been doing a lot of stock tradings, have been looking at definition of day traders. A lot of calls come in for day trading, whether I'm day trader and all those things. If you're looking for getting answer to that question or looking for real estate, of course, real estate is going up this time. It's really fantastic going up. Or if you're looking for foreign income, like we have this caller asking for foreign income, definitely this is a time to call. The studio number is 408-912-5038. Let's go to our the topic of the show, which is about the January 31st filing for the business owners. The employer must file the copies of W-2. This is known as W-3 forms, which by January 31st. It's very important to give to the employees this W-2. The employees, when they receive this W-2 form, please make sure that you are looking at those W-2 form, open that envelope, look at the form, see those items on the form is correct or not. Don't just bring that envelope to your CPA and then open it in the envelope and the CPA comes back and say, oh man, I see that withholding of taxes is very low, or the state is withholding is not done properly, or the medical your contributor medical HSA plan is not reflected, or the retirement plan box is not checked or is checked but you've not contributed. So W2 is a very, very important form that one should look into. And more important, during this COVID scenario, when you're working from home and your employer might be located in a different state. And that's create a lot of problems because your W2 will say different state withholding while you're working in a different, while you're residing in a different state. You've gone back to your family because of COVID, and now you have an issue with the state of sending you notices. So it's important this time. Please open the envelope, look at a W2 form, tick mark all the information that you see on W2, and make sure that whatever information is provided on W2 is correct. If you report anything wrong, please notify the employer so that they can notify their payroll companies and get the correct W2 form for you so that you can file a return like file return correctly. I've seen a lot of people, they go to the CPA and CPA says, oh, I see this problem, I see that problem. And the employee says, oh man, I paid so much taxes. I don't know why this happened. And all this thing backtracking, this taking, and then we goes to the employer, they have to collect W2s and all those things happens. So avoid all those problems. Make sure the W2 is correct. And employer, make sure that you're issuing that W2 in the right manner after getting confirmation from the employee that their W2's information is correct with the correct social security number. And remember, if the social security number is wrong or tax ID number is mentioned different, tax ID numbers should not be mentioned in W2, but some information not right, it might also impact your economic impact payment, EIP payments, which is very big because last year, 2020, you received one EIP, economic payment, we call it stimulus payment of $1,200. If your married filing joint is $2,400, plus you're going to receive the COVID relief tax bill, that COVID relief bill that was passed on December 28th, another $1,200. That is equal to $3,600 if those information is not right. So make sure you lose that benefit as well. Important thing about January 31st is the 1099 and miscellaneous and NEC, which is known as non-employee compensation, new form that has come up. If you're a business owner, you're making a payment to a contractor who is a sole proprietor, a partnership, or a LLC, and you're paying them more than $600 in a year, you should not be issuing them 1099 miscellaneous because that box on 1099 miscellaneous, which is known as box number 7, non-employee compensation, is been taken out from the 1099 miscellaneous and put on a new form which is called as 1099 NEC. So so if you're paying them more than $600, you have to issue that 1099 NEC, not 1099 miscellaneous. And that 1099 NEC is going to be e-filed with the IRS, but they're not going to share that information with the California Franchise Tax Board. Make sure that you mail out a copy of the Form 1099 NEC to the state as well. Don't assume that the state will have those forms, and they can penalize you because they will come to know from the tax return that you filed with the federal that you're missing this 1099 EC compensation. So, and you know that FTB makes money not from the taxes, but also from the penalties and interest for a very high amount. So don't make them richer by not doing proper things. So 1090 NSC is the form that you have to use, and 1090 miscellaneous is the form that you need to still there, but you need to issue 1099C if you're paying rent to the landlord, if you're making payments to an attorney. Okay, this year is full of maybe lawsuit and everything, subpoenas and depositions, and you're hiring attorneys for rental agreements for other things, and you and making payments to them. Definitely, you have to issue a 1099 miscellaneous to attorneys. So still, those things are royalties payment. If you're making any royalties payment, 1099 royalties, 1099 miscellaneous is required. If you're issue, if you're paying interest, and that then interest is also important. So dividends, all those things are important forms that needs to be done by January 31st. It's an important date. Remember that important date of January 31st. Last time I did talk about Proposition 19. I know I have to talk about that this time, but I took this topic today because I think that January 31st is coming very near to this deadline. I don't want listeners who are business owners and employees to miss that important information which we are discussing right now. Proposition 19 is definitely a very important thing. I will definitely take this topic next week, but this is important that for all the business owners, you have to make sure that by January 31st, issue the W2 properly, issue the 1099 EC, 1099 miscellaneous. What about the sales tax? The fourth quarter 2020 is due on April 30 on January 31st. By the way, do you know that the California Department of Tax and Fee Administration (CDTFA) has provided the California government has provided a time. They have extended this filing till April 30th. Fourth quarter has been extended April 30th. Don't have to make any payment. by January, you don't have to file. It's automatic filing, and the filing date is April 30th, 2021. Fourth quarter and first quarter 2021, they have extended till August 2nd, 2021. So it's a very good thing. Remember this in your mind. Talk to your accountant. Make sure they understand this, because it gives you cash flow, which you can use it for time for going over this crisis of COVID-19, which is really giving a lot of problems right now. And you can see those scary numbers on the TV. Whenever I open the TV screen, I see those numbers. Oh man, these numbers are going crazy, and it gives me a heartburn and saying, well, really? So we all have to make sure that we are taking all the precaution we are taking. We are very close to the deadline. We are very, I will not say deadline, I will say line. We are very close to that line. We just have to cross over it, and it will take some time, maybe 3 more months, maybe 4 months, 4 more months, but we will be there. We'll be there. Only thing is you have to take the like proper precautions and do it properly. So so January 31st is a big day for a lot of things. W2s, 1099s, sales tax. What about payroll tax returns? Quarter four payroll tax returns. And definitely that's a time for business owners to report that payroll tax returns. It's important that they do take care of it. We are coming to very close of very few minutes are remaining on the show. This is a time for all the listeners who have a question, burning question, and they want to get this question answered. The time to connect with us at the CPA on air. The studio station number is 408-912-5038. 408-912-5038. And we can take this any question that you're asking. So anything like by January 31st, also an important thing we have to consider is closing the books of the corporation. You need to close the books if you are a corporation, LLCs and partnerships, so that you can report proper books, proper things for the upcoming tax filing time of March 15. Now, what about our webinar, which is happening on January 30th? This is a webinar on PPP loans update, second PPP loan forgiveness for first loan and second loan, not to be missed. People are asking question one after the other. How should I qualify for second PPP loan with reduction in gross receipt? What are ways and means to do that? Whether I should apply forgiveness, whether I should not apply forgiveness, how should we take this forward? What are the ways and means to get it? So we are doing this on January 30th, this Saturday. Time is 10 to 12. Registration is on open as a website, sanjivcpa.com, sanjivcpa.com, and register there. It's a great webinar going to be with all the information that you need to get the maximum out of your loans and get the forgiveness for that money. We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta CPA.
Hey, hi. I have a question. So we already received our W-2s, and few of the tax consultants, they are filing our taxes, and they have given a tax estimation for standard, and the other one is they are telling standard, and there is one more. I'm not sure what is that name, but based upon the residential rental property, they have shared a PDF document, okay, and they are telling we will be filing based upon those scenarios, and we are getting more than what we expect than the standard deductions. So is it feasible for us to go ahead and file in that, actually?
Yeah, you can go ahead. I'm not very clear about the question, but anyway, if you're saying that they have taken out taxes based upon some document like a sale or something, definitely you
Standard
can
with
go.
planning. So if they file with standard with planning, the amount refund what we are getting is $4,673, and the standard shows something around like $2,800.
So you're getting more refund. You're saying they're
Yes.
giving that's okay. For whatever information they're provided, you can go ahead and report those things. But if you want more information, as we are coming very close to end of the show, you can call me after the show, and the
Mhm.
phone number is 510-825-7563. Okay. Thank you for the call. Really
Sure, no
appreciate that.
problem.
We are coming close to that show. But next week, I promise I will take the Proposition 19 And I hope everyone is staying at home safe. This is a horrific week with winds howling and constant rains and floods and everything in the Bay Area. Just keep yourself safe in your home. And thank you for listening. And we'll meet you next week, next Wednesday, 6:30 same time. Thank you.
Thank you for tuning in today to Dollars and Cents, hosted by Sanjiv Gupta CPA. Tune in next Wednesday and every Wednesday at 6:30 p.m. If you have any questions about the program or its related topics, you can get in touch directly with Sanjiv Gupta CPA by calling 510-825-7563. That's 510-825-7563, or visit sanjivcpa.com.
If your business has made a lot of profit and you are looking for ways to substantially reduce your tax liabilities by taking the full benefits available under TCJA and the CARES Act, then set up a consultation appointment before the 2020 tax year runs out. Call Sanjiv Gupta CPA today at 510-825-7563. That's 510-825-7563, or visit sanjivcpa.com.
भुला बात सच्ची कद रुकदी है हल एक नुक्ते विच मुकदी है.
Keep Bollywood's best music in your pocket all day, every day. Download the Bollywood 92.3 app for your iPhone or Android and take us with you